Have we finally seen the bottom for Lucid? Are shorts dangerously overextended heading into Investor Day? Or is this just another temporary bounce before the next leg down? And with macro data surprising to the upside and geopolitical tensions cooling slightly, could this be the setup that changes short-term momentum? Today, we're going to break down everything happening with Lucid Group, the expectations for this upcoming week, what could create volatility, what the macro data is telling us, how shorts are positioned, what the options market is pricing in, and why Investor Day could become a major catalyst. If you're holding Lucid, trading it, or watching for an entry, you're going to want to pay close attention to this. Let's start with today's price action because it was wild. Lucid opened under pressure and dropped as low as $9.46 early in the session. Fear was clearly present right out of the gate. But then something shifted. Buyers stepped in aggressively. The stock flipped from red to green, and we saw a high of 10.05, with the stock finishing up roughly 2% on the day. Anyone who bought that early morning fear executed beautifully. Now, the big question is, what caused the reversal? It wasn't company-specific news. There were no SEC filings, no surprise press releases, nothing fundamentally new from Lucid itself. The move was largely macro-driven. We received both S&P Global Manufacturing data and ISM manufacturing numbers. ISM, although based on a slightly smaller survey group, delivered a major upside surprise. The forecast was 51.3, and the actual print came in at 52.4. That's not a marginal beat. That's a strong signal that manufacturing activity is holding up better than expected. Why does that matter? Because heading into today, the market was loaded with fear. A lot of it stemmed from geopolitical tension involving Iran. Investors were concerned about how retaliation might unfold and whether oil supply disruptions could escalate further. Instead of an aggressive escalation, what we saw was a temporary hold on 20% of oil exports. That pushed oil stocks higher, but it also created initial volatility across broader equities. However, once the stronger-than-expected economic data hit, sentiment shifted. The market became more optimistic. Here's where it becomes interesting for EV stocks like Lucid. Oil prices continuing to trend higher can actually benefit electric vehicle companies. When gasoline becomes more expensive, consumers naturally start reconsidering alternatives. Now, will that immediately cause a surge in Lucid orders? Probably not. But from a sentiment standpoint, higher oil prices can serve as a subtle tailwind for EV narratives. At the time of this recording, Rivian Automotive was down about 1.44%, and Tesla Inc. was down roughly 0.4%, though it looked like Tesla might turn green. So Lucid showing relative strength today is notable. Now let's talk about the next major catalyst, Investor Day on March 12th. We're about 10 days away. This is going to be significant because this is where Lucid outlines its long-term growth roadmap. Production targets, expansion plans, product strategy, potential cost improvements, all of that could be addressed. Investor days don't happen frequently, and when they do, they can dramatically shift sentiment depending on how convincing management is. Now let's get into the short interest because this is where things get very interesting. Shorts increased their position by 98,000 shares. Roughly 33.48% of the free float is currently sold short. That equals about 44.8 million shares. The average cost to borrow is sitting at 82.4% annually. And just to clarify, that's annualized, not daily. Days to cover stands at 6.14 days. That's heavy positioning. When you have over a third of the float shorted and cost to borrow elevated, it creates vulnerability. If a strong catalyst hits, especially something unexpected, covering pressure can accelerate quickly. Heading into Investor Day, I would not be surprised to see some shorts reduce exposure simply from a risk management standpoint. When positioning becomes crowded, even neutral news can trigger covering. And imagine if Lucid were to announce something stronger than expected, maybe improved production guidance, better cost efficiency, or unexpected partnerships. That could absolutely squeeze some of these short positions. Another potential sentiment booster would be insider buying. If CEO Peter Rawlinson were to purchase shares on the open market using his own money, transaction code P, That would send a powerful signal. Not compensation shares, not gifted stock, real cash purchases. That type of move often creates a psychological shift among investors. Now let's look at options flow. We're seeing 722,000 call contracts versus 930,000 puts. About 56% of total options activity is bearish. Bulls appear to be targeting the 10.50 to 11 range, while bears are positioning for sub-9 levels. There is an outlier strike, but it looks more like hedging activity rather than a strong directional bet. Secondary market activity today was minimal. Only 2 transactions, both sells, one for 890 shares and another for 230 shares. Small in size, but they did contribute to that early volatility. A major driver of today's movement, and this applies not just to Lucid but many stocks, is algorithmic trading. Volume patterns strongly suggest heavy algo participation. The flow is almost copy and paste across multiple tickers. Automated systems are clearly influencing intraday swings. Looking at technicals, Lucid is trading around the $10 level between a pivot and S1 support. Strong support sits at $9.30, resistance near $10.18. According to Elliott Wave analysis, there's a pivot around $8.86. As long as Lucid stays above that level, a recovery into the 11 to 12.14 range remains technically plausible. Earlier in the day, price action looked unstable, but closing above the 10-day moving average is a positive sign. If Lucid can hold that level, a push toward the 50-day moving average, that blue line, becomes increasingly realistic. Market positioning data shows more willing buyers around 960 and more willing sellers near 1120. That structure suggests upside attempts are possible, but supply increases as we approach that 11-plus area. Stochastic RSI is currently around 72, which places the stock in slightly overbought territory. That likely contributed to the morning volatility. Overbought readings often lead to short pullbacks before continuation. Over the next several trading sessions, Wall Street will also be watching earnings from major companies with strong consumer exposure. Consumer strength directly impacts broader market sentiment, which in turn influences risk assets like Lucid. So heading into this week, here's what matters most: macro stability, oil prices, short positioning behavior, and anticipation building toward Investor Day. Now I want to hear from you. Where are you looking to buy next? Do you think 930 gets tested again? Or does Lucid hold the 10-day moving average and push toward 11? What are you hoping management addresses on Investor Day? New products? Production ramp clarity? Profitability roadmap? International expansion? Drop your thoughts in the comments. Disclaimer: this video is for informational and educational purposes only and is not financial advice. I am not a financial advisor. Investing in the stock market involves risk, including the potential loss of capital. Always conduct your own research and consult with a qualified financial professional before making any investment decisions.